Welcome to Apex Strike Zones. In this video we're going to take a look at strike zones, how we can trade them, apply them to other systems, and also how we can use strike zones for continuation trading. The first thing you do is to start at 4-hour chart, and then you can go up. You can take daily, weekly, monthly, and so on, but 4-hour chart is mainly where you will be using if you trade on a weekly basis. Then what you do, you locate your highest level like this, and your lowest level like this, is to help you identify a strike zone. A strike zone is when the market peak up or peak down, and when they do a reversal, meaning that the highest top latest support is taken out by a closed body, or the latest peak low resistance is taken out by a peak body, then you have a strike zone. All right, that's the rule of a strike zone. Put it down on a paper note or put it on your computer in Notepad or anything, because that's rule number one. You look at the highest peak and the lowest peak, or if only one is existent, or this one is far away or this one's far away, you just need the latest, of course. All right. Now we know what the strike zone is. Then what we are looking for, we are looking for strike zones that look like this, but also have some sort of consolidation to the left, right? Like a shoulder, and this is like a head. It's like a head and shoulder, but we should not mix them up here because this is something very different, right? So when you have this, you can see this red area is here, right? This small one. And then you have the larger one here. See that? That's how it looks like. And this is your neckline. This is your neckline, right? And what should happen, either here or a bit higher, more like here, is that the market should go into consolidation for at least 4 candles, 3 or 4 candles. You will see when it's consolidated because it's sideways. It's these boring markets. It's not trending, it's just going sideways, right? So that's a better view of you understanding what it is, right? Now, what you're doing in this consolidation zone, when you are going to look for a sell, which this is because this is a reversal sell, you want to see where is my latest bullish candle. Where is my latest bullish candle? And from that candle, if possible, you call it 1, you go back 2, 3, and 4. And among these 4 candles, where the latest bullish candle is number 1, 2, 3, 4, you go down to the lowest body, put a line there, and you go up to the highest wick, which is there. Okay. Now, what you want now, you want this area to fail, meaning you want it to move to the downside clearly. This one is a school book example. We're getting to much tougher areas shortly here. So what you want is consolidation to be taking out like this, profit release, right? You're not interested to trade here because it's risky business, right? What you want now, you see that I put a line here and I put a line here. If you instead create a box of this, This is my latest bullish 1, 2, 3, 4, right? This is my bottom. This area is my strike zone. This was the strike reversal. This was the left tip, right tip, profit release, coming back up, wicking my strike zone. And when it wicks my strike zone, I want to see a clear engulf like this. If you go out and check this with supply and demand zone, they normally say that you can just enter when it comes up to here. Your stop loss is about here. That looks perfect in history, but so many times it goes right through up here. But with the confirming candlestick, with the confirming engulf, you are in much better position. And now what do we want? We want the market to come up to the candle it engulfed. Either the bottom of it or the top of it. Take away this one. Take away this one. The reason you want that is because you want to have a risk that is so small so you can do these trades many times. Right? So what you see now, you can take away this one as well. This was your strike zone. Market come up, hit your strike zone, wicked it. Right? Get your engulf, but you don't want to enter down here because 65, 67 up to 69.20. It's not super much, but the good trades will always come back, test the body it engulfed. This is an engulf. Will come back, test its body, the lower side or the upper side, right? Preferably you want to have the upper side, but you can take a position here as well because it's like a 50-50 or 20-80 or 80-20. You never know. Sometimes market decide to go here, sometimes market decide to go here, sometimes it do both, right? So if you have went from here up to here, if you have entered here, where is your take profit? Remember, you can use the Apex system with this, you can use the Sniper system with this, but when you understand the bigger picture, where the latest supply, demand, or strike zone exists, you will be in a position to control what you're doing on the market and understand why you are doing. When you're up here, you should go back to the lowest wick here, right? That candle's wick is normally a very good take profit. Between the wick and the start of the body is normally a very good take profit. You see what it did. It come down to this new profit zone. It did that, rejected, and now going sideways. If the market comes back up again here, testing this strike zone again, you can of course just repeat what I just showed you, right? Now you know how to identify a strike zone, how to find its latest bullish candle, go back 3 more, take the body low to the wick high, there. In this zone, you want to see a reaction again after it has done a pro and fall. The reason you want this pro and fall is because if it has been here coming up, chances for it to go back in this area is huge, right? It repeats its previous pattern. And if you start to identify these tops up here, let us take away all this stuff and put in, let's see where we have that one. Here. This is a short position, right? If you were entering with a stop like here, and your profit would be there, you would have a trail of 2.56. Good money management. Okay, that's how you trade the strike zone, identify the strike zone, see it consolidate, see it fall down, come back up into the strike zone where you have put your box. You get an engulf. You want to go with the retest of the engulf or the top of the engulf as high as possible, so you get the lowest risk possible and with the maximum gain. All right. Thank you for listening to the first video of Apex Strike Zones.